All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Friday, everybody. Today's August 21st, 2026. Our top story today, the debasement trade is back for now. Gold, silver, Bitcoin, all ripping ever since Scott Bessement's announcement earlier this week that he is going to try to cap interest rates. Gold pushing 4,600 an ounce. Silver threatening to recapture $70 an ounce. Bitcoin is up over $77,000. The move in Bitcoin has been amazing this week, up $15,000 in 4 days. Those Bitcoin guys, moderation clearly not their strong suit. Okay, 15 grand in 4 days. That one's probably not going to hold, or at least it's not going to keep going for a little while. We'll look at the charts and everything. But look, all three charts, a resounding breakout. Gold has had a nice breakout earlier this month. Bessent's move this week has added to that. Silver is finally along for the ride. The chart in silver hadn't quite confirmed the breakout that gold had made. Now it has. And of course, Bitcoin, you guys just hang out over there. Do your thing, your Bitcoin thing. It's adorable. So what's going on here? Look, the bond market is still debating whether Scott Bessent is going to be successful or not in capping long-term interest rates using Treasury buybacks. He came out earlier this week. He said, we're doubling Janet Yellen's existing $2 billion of buybacks. He's going to make it $4 billion. And then the market kind of like called his bluff and gave back most of the gains. And so yesterday he actually came out and he said, we'll go above 4 if we have to. Be careful not to look too desperate here, Scotty. But anyways, the market, like the 10-year Treasury, sitting about 4.7% right now, 4.70. It was like 4.74 when the announcement was first made. It went down as low as like 4.65. So it's still bouncing around. The bond market doesn't know if he's going to pull it off or not. And the dollar alternatives, gold, silver, and Bitcoin, don't care. They're running. They're over there saying it doesn't matter if he's successful or not. The fact that he's going to try is enough for me to jump into dollar alternatives. And so, look, it's ripping here. Gold, silver, Bitcoin, all three of them looking really good. Now, interestingly enough, I'll probably get some pushback from some of my crypto haters out there, but let's just call it what it is here. The real issue with what they're doing with the buybacks is they are issuing short-term debt, 1 to 3 months, 1 to 6 month Treasury bills, and they're using the proceeds to buy back long-term. All right. It is net liquidity neutral. It's not dollar printing, but it is manipulating the yield curve. No, it's not yield curve control either. It is a step in that direction. They're manipulating interest rates. Now, here's the point. He's issuing all of this short-term debt, which they're already dependent on in order to buy back the long-term debt. So the success of this and Bessent's ability to escalate this further is dependent on finding a market for Treasury bills. He needs to be able to sell all that short-term paper in order to bankroll what he's doing. And believe it or not, the biggest marginal buyer over the last few years of Treasury bills, the source of new demand for T-bills, has been stable coins. I know, I'm not crazy about stable coins. I don't hold any stable coins. I don't trust stable coin issuers. All right, you don't need to convince me of this. But the fact is, a lot of people do. And a lot of people are now using stable coins, in particular, sub-Saharan Africa, South America, places where people don't have ready access to the banking system. Stable coins has emerged as a preferred source of storing wealth or of transacting, and especially in places where the local currencies are an even bigger joke than the US dollar is. And so really, Bessent's success here depends on, is he able to keep growing the market for stable coins so that the stablecoin issuers take the dollars, buy the Treasury bills, which was mandated by the Genius Act, and therefore Bessent would be able to find a market for all the short-term paper that he's issuing. That also means success depends on finding new markets in these regions, sub-Saharan Africa and South America, which would mean if Bessent is successful, that would be horrible for the currencies in those regions, sub-Saharan Africa and South America. So, look, I don't know if it's going to work. I'm not going to participate. I don't want stable coins or trust them. I think they're stupid. But that's the only place Bessent is going to find enough demand for these T-bills from. Also going on this morning, we got a couple of AI headlines once again. Supermicro Computer has investigated themselves and found no wrongdoing. A shocking turn of events. We'll cover that one anyway. We've got Broadcom is out with a $60 billion private credit circular financing deal. Broadcom's gonna find somebody to lend $60 billion to their customers so their customers can buy the chips. So Hawk Tan is over there like, y'all got any more of that 401k and pension money? I need some debt. I need to give my customers a bunch of money so they can buy my product. Come on. Yes, thank you, Tyrone Biggums, who is now the CEO of Broadcom, apparently. Yep, they just can't get enough of private credit in the AI bubble. We're also going to talk about a little town called Eagle Mountain, Utah. I posted about this one on X yesterday. Eagle Mountain, Utah is the perfect snapshot of the U.S. economy. You've got data centers, you've got runaway property taxes, and you've got the problems in the beef industry all circled around Eagle Mountain, Utah. And it's that beef thing that I also want to elaborate a bit on today, because President Trump is out with a post on Truth Social that I'm sure some hedge fund paid $100,000 for early access to, that says he is going to allow 300,000 metric tons of ground beef without tariffs into the United States. All right, so we'll talk about why this is good. We'll talk about why this is bad and how we got here. There's some good here. Beef prices are ridiculous. People can't afford ground beef anymore. But at the same time, we've got ranchers we got to think about, and we've got a meatpacking industry that has just desperately needs to be reined in. A strong case for antitrust intervention there. We'll talk all about what's happening in the beef industry. We're also going to talk about President Trump's latest double down on economic warfare with Iran and how that risks escalating the trade war with China, because President Trump is now threatening secondary sanctions on anybody doing business with Iran. Well, we'll see if that survives contact with the Chinese or not. Also, along the lines of Iran and colonialism or imperialism, whatever you want to call it, U.S. intervention in foreign policy abroad. A couple of stories about Venezuela. This is interesting this morning. It turns out Venezuelan oil production is already increasing rather substantially. So that is good, but that's exposed a whole new problem. We're having trouble getting that oil to market. And while we're at it, we finally may have resolution of Venezuela's gold, which has been frozen in place by the UK for more than 10 years, ever since the overturn of elections in 2015. Well, that gold may finally be moving. So a lot happening with Venezuela here. And last but not least, we're going to talk about one of my favorite subjects, carbon credits. And by favorite subjects, I mean I absolutely despise carbon credits. It does nothing to help the environment. It is a wretched hive of scum and villainy and embezzlement and fraud. It drives up energy prices for poor people while doing nothing for the environment. But yet, Germany has revoked the suspicious carbon credits tied to several fake carbon capture projects in China. Shocking, I know. And if we're going to talk about carbon credits, we've got to talk about one of my favorite tech companies and their prior involvement with carbon credits. Stick around to the end of the show for that one. Guys, we got a lot going on today. Why don't we shrink my big melon of a head? Let's see what's going on in the world of finance. Don't forget the like button, the subscribe button, the hype button, and whatever button you feel so inclined to push this morning. It's all good for the channel. And, well, come on back Monday, because we do this every business day. Right now, the S&P 500 is higher by 30 points, or 0.41%. It's been marching higher all morning. Looks like we made a little bit of a turn a few minutes ago. Not sure what's driving this selling at the moment. The Dow is up 300 points, 0.58% in the green this morning. And the NASDAQ is higher by 150 points, 0.5% to the upside. So stocks are having a good morning here. We've got the U.S. dollar is lower by 9 basis points, 98.78. The dollar has been weaker most of the week. Looking over at the bond market, yields higher again. Again, the bond market continues to throw shade at Secretary Bessent, saying, I see what you're saying. I see what you're doing. I see what you're trying to do. I'm not sure you can pull it off. We've got the 30-year yield is higher again at 5.258. That's higher by 2 points and change. It went as high as 5.33 this week. So since Bessent's intervention, the 30-year yield has come down but it hasn't held those drops. The 10-year, same story, 4.714%. That's higher by another 1.5 points. Back above 4.7. We were at 4.74 on the 10-year the last two times Bessent intervened. We were at 4.74 when he intervened in the yen market at the beginning of this month, and we were at 4.74 when he intervened in the Treasury bond market this week. So watch that level at 4.74. It's an awful specific number. Maybe it's just a coincidence that that's where he intervened at the 10-year, but watch that level. We'll probably be there pretty soon. The 2-year yield is at 4.206. That's higher by 2 points and change. And the 1 month is at 3.701, higher by a fraction of a point. And I hate pop-up windows. Also going on this morning in the commodities board, there's your debasement trade. Look at this here. We've got spot gold, 45.83, higher by another $64 or 1.4% in the green this morning. Very briefly, we were above $4,600 this morning for spot gold. Gold has now rallied close to $600 since the start of the month. And again, the start of the month was that Treasury intervention in the yen. Ever since the Treasury started messing with things around the world, that has just been rocket fuel for gold. Silver is participating as well, higher by $1.48 this morning, $69.58 for spot silver, higher by 2.2%. Silver had a great week, and we were very briefly back above 70 this morning. We didn't hold that level, but silver is along for the ride. We're going to look at the charts for gold, silver, and Bitcoin in just a minute here. We've got coppers higher by 1.8% this morning. Platinum 3.8% higher. Look at platinum back above 1,900 for October futures. Big move in platinum this week. Palladium up 1.7%. And crude oil is down by about a dime here, 0.1% lower, 86.74 for October WTI. Look at Bitcoin. What a move in Bitcoin. Over $15,000 in 4 trading days for Bitcoin. Currently $76,847 as priced on Coinbase. It's not going to hold, guys. Bitcoin went as high this morning as 79,500, just a runaway train. But look down here. Look at the RSI. All right, the relative strength index. That's a measure of momentum. It's currently sitting at almost 85. That is obscenely high. All right, to call this overbought here is putting it mildly. It's not going to stay at this level. Nothing maintains an RSI of 80 plus for very long. Does that mean Bitcoin is done going up? Not necessarily. It just means it's already gone up faster and harder than anything really logically should have. But we're talking about Bitcoin here, which is notorious for doing exactly that. That being said, be careful chasing here, guys. The RSI is screaming that this thing is supposed to be heading lower soon, and already it's given up a couple of thousand since the highs this morning. Let's talk, though, about what's going on with Bitcoin. Stocks rise as Bitcoin rally lifts crypto shares. That's according to Markets Wrap. U.S. equities advanced with crypto-linked stocks among the biggest gainers as Bitcoin headed for its best week in more than 3 years. Treasuries trimmed early gains as oil wavered. S&P 500 futures were up while the index remained on track for its first weekly loss this month. Strategy, Coinbase, Robinhood all rallied in pre-market trading as Bitcoin raced towards 78,000. Europe's Stock 600 was on course to dodge its worst run of losses in nearly a decade, and chip makers drove an advance in Asia. After days of swings that saw long-dated yields hit their highest levels in decades, treasuries were little changed on Friday. Brent hovered around 94 a barrel. Gold hit the highest level since May, and the dollar remained under pressure. Investors are assessing the fallout from a week that saw bond yields spike on worries about inflation and spendthrift governments, a surge that prompted the Treasury to intervene to curb long-dated borrowing costs. They're now awaiting a promised new initiative from Treasury Secretary Bessent aimed at fiscal consolidation. And I want to emphasize the word promised here, guys, because Bessent's intervention in Treasury markets doesn't start until September. All right, it's going to run from September to pretty much Election Day. What a coincidence, by the way, that the next quarterly refunding announcement when this buyback program ends is the day after Election Day. But it hasn't actually started yet. That's important. All the moves this week have just been signal and jawboning. It hasn't been the actual intervention itself. Equity markets are vacillating between concerns about the tech sector and rising bond yields, though today both seem to have declined, said Joachim Clement, strategist at Panmure Liberum. Fact is that the U.S. Treasury can do little, if anything, to turn the trend in long-term bond yields for good. For good, yes. They can't permanently suppress those yields, at least not without sending inflation skyrocketing. That doesn't mean in the short term they can't exert tremendous influence over the Treasury market or cause things to break elsewhere. But they're sure going to try, and that's enough for Bitcoin. Now, gold is also looking good here. Gold set for third weekly gain on U.S. Treasury buyback plans. It's been a good August for gold. Gold was on track for a third weekly advance after the U.S. Treasury's unexpected ramp up in buybacks of long-dated government debt underscored concerns about its fiscal burden. Bullion was trading at $45.90 an ounce and was poised to end the week about 5% higher. The U.S. Treasury's liquidity injection on Wednesday sent yields and the dollar lower while boosting bullion. On Thursday, Treasury Secretary Bessent said he'd prepared to expand buybacks of costlier debt and flagged that the administration would soon unveil a fiscal initiative to address the highest borrowing costs in years. It's important. Yesterday, he came out when it looked like the bond market was starting to doubt whether Bessent would be successful. He threatened to go even bigger than the $4 billion, which was already a doubling of the prior buyback level. While yields later in the week retraced much of the decline that the buyback had prompted, the move reflected concerns about soaring government debt and the prospect of currency debasement. Those are both drivers that helped to propel gold's earlier multi-year rally as investors sought alternative safe havens. The debasement trade was all the rage back last fall when Bitcoin was making all-time highs. Gold and silver were going vertical. It's since, earlier this year through the winter, it kind of fell out of favor, especially with the big sell-off in Bitcoin that was followed by the big sell-off in metals in January. But it looks like it's making a comeback here. What is interesting is that gold has held up even as long-end Treasury yields remain elevated, said Charu Chanana, say that 10 times fast, chief investment strategist at Saxo Markets. That suggests the rally is increasingly about dollar weakness and U.S. fiscal or monetary credibility rather than simply a lower yields story. And I agree with that assessment 100%. Look at this beautiful gold chart. All right, this is going all the way back to September of last year, right? The debasement trade was all the rage. Metals were going up and to the right, and then in January they went vertical. The tech bros, once the tech bros started piling into gold and silver, we knew it was getting ahead of itself. Started warning everybody, don't listen to AI guys on YouTube about the silver trade. And well, we had that big brutal sell-off. It lasted for about 7 months, and then we broke out of this downward trend. We broke out on August 4th, which was one trading day after Bessent's intervention in the yen. All right, that was the signal that caused gold to break out. So there's no questioning this chart, guys, right? Here's where he intervenes in the yen. And then earlier this week, here is where he intervenes in the Treasury market. All right, there is no question. Look at the big green candles that followed both of those interventions. Scott Bessent is what is driving gold higher here. This is a great looking breakout here. Now, I would question, or I would point out here, the RSI, the relative strength, sitting just below 70. Gold is looking a little overbought here, due for a pullback, due for a pause. But again, the signal that Bessent intends to keep long end rates capped, that should be in the long term rocket fuel for gold. Now, silver was a little slower to react. This is the silver chart now, daily candles going back to the fall. Again, things were going really well. Then we had that big monster sell-off. We had a 7-month period of consolidation. Now, the breakout in this chart was not as resounding as gold, right? We had a little bit of a pop above this line, and that was about a week after the yen intervention. We did come back and made a little bit of a retest. All right, that's nice there that we retested that line. Bessent intervenes in the market, and then the silver chart starts to move higher. All right, so this doesn't look quite as convincing as the breakout in gold, but as Mish put it this morning in our phone call, silver's catching some strays here. And so silver's looking pretty good, pushing $70 again. I don't know if this is going to last, guys. Oh, the other thing I wanted to point out, RSI on silver, about 66, not quite as overbought as the others. But again, the momentum here is starting to push its limits here, all right? No FOMO. We say that all the time. Can this upward trend continue? Yes. Has it already gone a little too far, too fast? Also, yes. All right, now let's talk about some AI stories this morning. Supermicro says current leaders weren't aware of smuggling plot. Oh, what a unique disposition among criminals. They're innocent. Oh, wow. Well, I'm glad we settled that. Let's turn the lights off, guys. We're all done here. This company, it is amazing that people still buy this company. Supermicro Computer completed an independent, wink wink, probe into the alleged smuggling of NVIDIA chips into China, with the investigation team concluding the company's current senior management had no knowledge of the purported scheme. Notice they said the company's current senior management, because the last time Supermicro told us that there was no evidence that they were doing this, one of their co-founders and board of director members got hauled away in handcuffs for smuggling chips to China. So the current senior management has no knowledge of it, even though the prior senior management from a month ago was doing exactly this. The investigation began after U.S. prosecutors charged Supermicro co-founder Yishan Wali Law and two others in March with illegally diverting billions of dollars worth of the company's NVIDIA-powered servers to China in violation of export controls. The trio allegedly sold the hardware to a Southeast Asian company and coordinated its ultimate shipment to Chinese customers. Law resigned from the Supermicro board after he got arrested and indicted. All right, so two important things in this paragraph. First of all, the fact that they're saying that they sold the hardware to a Southeast Asian company and coordinated the ultimate shipment to Chinese customers. They weren't selling directly to China. They sell to middlemen in Singapore, Malaysia, Indonesia, Thailand, and then those companies sell to China. And Supermicro knew what they were doing. Supermicro was helping them to do it, all while playing stupid, using hair dryers to peel the labels off of GPUs and then put them on the dummy server racks in order to throw off the customs people. All right, they were actively involved in this treason. Let's just call it what it is. This is treason. This is an American company, mind you. The other thing I want to point to is Yishan Law, or Wali Law. Wali Law was, I believe, CFO in the late 2010s. And two accounting frauds ago at this same company, after Supermicro was delisted from the NASDAQ in like 2020, Supermicro fired Wali Law. They basically said he was responsible for the accounting fraud. After they fired him, they got relisted by the NASDAQ, I think in 2021, and then they hired Wali Law back immediately after they got relisted. All right, so they get delisted, they fire this guy, they get relisted, they hire him right back. Then they have another accounting scandal in 2024. They were at risk of getting delisted. They hired BDO, who came in and signed off on their 10K. They still have material weakness in internal controls of financial reporting flagged on their audits, which basically means these guys are effing liars. Wali Law is then indicted for smuggling chips to China. What a scumbag this guy is. And the fact that this company fires him when they get caught and then rehire him as soon as anybody comes in and looking tells me the people hiring Wali Law are also effing scumbags. Now those people are saying we investigated ourselves and found no wrongdoing. Supermicro tapped Scott Angle, its lead independent director, and Tally Liu, chair of the audit committee, to lead the investigation, according to a statement the company issued on Thursday. They, in turn, worked with law firm Munger, Tolles, and Olson and consultant Alex Partners. All right, this is kind of important here. That Tally Liu, the chair of the audit committee, keep in mind, Supermicro has not posted an audit without a flagging for material weakness in internal controls for 3 years now. All right. So the chair of their audit committee, which can't get a clean audit passed, was responsible for investigating themselves into this smuggling thing. I love these guys. Investigators found no evidence of direct sales to restricted parties or anything that would suggest Supermicro's previously issued financial statements were unreliable based on said potential diversion of restricted products, the company said Thursday. Supermicro took several personnel actions involving sales, technical support, and business development functions, including terminating some people for failure to follow policy or the company's code of conduct. Yeah, they fired the people who already got arrested. Congratulations. You really cleaned things up there, Supermicro. Also, I would point out to say that investigators found no evidence of direct sales to restricted parties. Keep in mind, that was never the accusation. They were never accused of directly selling to the Chinese. The whole thing they're getting prosecuted for is selling to middlemen, knowing those middlemen are then selling to the Chinese. So what they're reporting here is not what they were supposed to be investigating. And the people reporting this are the same people who are signing off on their freaking audits with unclean asterisks next to their financial statements. This means nothing. This is criminals insisting that they're innocent. Nobody should pay attention to this. Supermicro stock should not rally on this. This is an effing joke. I cannot wait to see Charles Lang, the CEO of this company, hauled in front of a judge or hauled away in handcuffs, sentenced to prison for what he has done at this company. Meanwhile, it is Circular Finance Friday. Broadcom seeks more than $60 billion in latest AI debt deal. This is another $60 billion in circular financing on top of the $500 billion that NVIDIA is trying to arrange with the same private credit outfits. Keep in mind, this is the same private credit that is currently telling investors they can't have their money back because they invested in a bunch of bad software loans back in 2020. Now they're pumping hundreds of billions of dollars of people's retirement money into data centers, none of which turn a profit. Oh, this is just going to end so well. Broadcom is in talks with a group of lenders to raise more than $60 billion in debt for an AI chip financing deal that will benefit Anthropic and other companies, according to people with knowledge of the matter. The financing, which is still being ironed out, may also include a roughly $30 billion junior tranche, said some of the people who asked not to be identified because the information is private. So we're getting close to $100 billion here now, $60 billion in this senior stuff, another $30 billion of garbage junior tranche. Under the proposed plan, Broadcom would guarantee a portion of the senior secured tranche, which could range from about $60 billion to $70 billion, some of the people said. The numbers under discussion would potentially bring the total to as much as $100 billion. So Broadcom is going to co-sign on a loan from your retirement to their customers so their customers can give your money to them. That's what's going on here. And if that sounds circular to you, that is because that is freaking circular. All right, what happens if the customers can't pay? Broadcom has to pay. How's Broadcom going to pay if their customers can't pay them? The answer is they won't. This means nothing. The agreement would add to a rush of deals aimed at financing artificial intelligence infrastructure. AI companies like Anthropic, the maker of Claude platform, are taking a bigger role in the build-out, aiming to ensure they have enough computing capacity. Broadcom, meanwhile, is looking to sell more chips and other data center equipment, challenging NVIDIA in this lucrative market. Blackstone and Apollo, two private credit firms that are gating redemptions, not giving their investors their money back, are in talks with Broadcom to participate in the chip financing following a partnership the three companies struck in June to help finance computing infrastructure, according to the people. The debt would be issued by a special purpose vehicle, some of the people said. In other words, a special purpose vehicle means they don't have to report it as debt on their balance sheet. And remember, this is your money. They're going to owe a lot of it to you, and they're hiding it from their books by creating shell companies and putting the debt there and then co-signing for it. Again, this is all about how can they get your retirement money to pay for their experiment in an unproven technology that is yet to generate a single penny in profit for anybody outside of the hardware space. Broadcom stock up 2.5% on this news, $372.85, up by about $8. All right, now we got to talk about this little town, Eagle Mountain, Utah. This is a post I put on X yesterday, and this is relevant today because of some news that broke just this morning. Welcome to Eagle Mountain, Utah. Population 66,000, and our economy in a nutshell. In 2018, Meta was granted a 100% 40-year waiver on property taxes for a data center in Eagle Mountain, worth a combined $750 million. Last week, Tyson Foods announced the closure of a beef packing plant in Eagle Mountain, resulting in the loss of 723 jobs. All right, a meat packing plant. Put a pin in that. We'll be back to that one. 3 days later, the town council approved a 70% increase in the property taxes for local residents. This was only after public outrage forced the repeal of an earlier 183% increase in property taxes. So this is such a perfect microcosm of our economy. First of all, you got Tyson Foods shutting down a meat packing plant. So like real things, people raising cattle that we eat, that's going away. But we've got massive spending on data centers, partially financed by a $750 million tax break. They're paying nothing in property taxes, while the town is seeing their property taxes nearly double, a 70% increase. And the only reason property taxes for these average people are only going up 70% is because earlier this month, at the beginning of August, they passed a 183% tax increase. People were freaking crying at the podium at this town hall meeting. They were threatening to recall all the town councils. So after the public backlash of a unanimous vote, by the way, to raise property taxes 183%, they lowered it to a apparently more palatable 70% increase in property taxes. So if you're one of those 723 people at the Tyson plant, you just lost your income and now your property taxes are going to nearly double. All the while, multi-trillion-dollar Meta is paying $0 in property taxes, a $750 million property tax break. And all these data center bros are out there like, oh, Meta gave the town a whole bunch of stuff. They paid for infrastructure for the town. No, they didn't. Meta made a deal with the town in exchange for this $750 million tax break. Meta paid for transmission lines and gray water infrastructure and roads in the town, but Meta is the only one that uses those things. The gray water infrastructure is for their own cooling water effluent, water that they tell us publicly that they don't consume. Well, then why did they need gray water effluent infrastructure if they don't consume water? They built a road that wasn't there in the first place. They didn't need it because there was no data center. So Meta built itself a road that's not giving anything to the town. And they paid for transmission lines that flowed directly into the data center. That did nothing for the people of the town. So you have this multi-trillion-dollar company paying nothing. And then the poor people in this town who just lost their jobs, they're seeing their property taxes nearly double, only because the town council couldn't get away with nearly triple. What a mess in this town of Eagle Mountain, Utah. I mean, after years of inflation, people got to live through this, all the while Facebook is laughing all the way to the bank. Now, I kind of focused on the data center there, but I also want to zero in on what's going on with Tyson Foods because they just closed this plant, this meat packer, 723 jobs. We got this from President Trump on True Social today, which, again, he sold early access to this to hedge funds. So if you paid for a 5-second head start on this, your trading algorithm could have gone and shorted beef prices on this news, and you probably would have made a bunch of money. Insider trading for the low price of $100,000 by a sitting president. Oh, my God. But I digress. Today, I concluded a deal to substantially lower the price of ground beef for working American families. As everyone knows, under President Biden, beef prices soared at their fastest rate, and the American beef herd fell to its smallest size in modern history. All right away, I have to say, under President Biden, yes, beef prices did go up, but beef prices also soared under President Trump's first term, and the American cattle herd also shrank under President Biden's first term. This goes all the way back to the Obama years. This isn't Biden's fault. This isn't Trump's fault. This is Biden, Trump, Obama, everybody else who did nothing about what's going on with the cattle ranchers this whole time. As we work to rebuild this herd and help our ranchers for the next 90 days, the United States will allow up to 300,000 metric tons of product for ground beef to be imported with no out-of-quota tariff. In other words, we are bringing 300,000 metric tons of foreign beef into the country tariff-free. It's probably going to come from Argentina and Brazil, by the way, is where we tend to get our beef that we import from. All right, so I get what he's saying here, right? Prices are too high at the supermarket. People are struggling, especially poor people. Food inflation disproportionately affects the poor. I get that. But you also claim to be supporting the great American ranchers. Well, if you're bringing 300,000 metric tons of the competition's product into the country in order to undercut the price of their product, that is not helping American ranchers. That is further hurting American ranchers. It's helping the people shopping at the supermarket. All right. But for everything, there's an equal and opposite reaction. So this will be counterproductive if you're trying to help the ranchers. We have a commitment that this beef will be sold at 25% below current market prices. This deal will reduce prices for Americans while giving space for our great American herd to grow again. No, this is only going to expedite the collapse of the herd. This is not going to help it grow. Thank you for your attention to this matter, President Trump. All right. So I found this chart, and this kind of explains what's been going on. For the last 15 years or so, And look, I've spoken with a couple of ranchers at conferences over the years. Admittedly, a small number. I don't interact with cattle ranchers all that much, but all the ones that I've spoken to over the years have all said the same thing. The bottleneck at the meat packers is the problem. You have had a ton of consolidation among the meat packers over the years, like Tyson chief among them. They're buying each other up. There are fewer and fewer companies, and as they're consolidating, they're shutting down capacity. And so when they shut down capacity, you get this choke point in the middle of the supply chain. Everything upstream of that, the cattle, starts going down in value. And everything downstream of that, the finished product that you consume at the restaurant or the supermarket, starts going up in value. It's the consolidation at the meat packers that really killed the American cattle herd. And you can see it in this chart. This goes all the way back to 2013. It really hit its stride around 2014, 2015. The blue line is the Federal Reserve published price for beef for cattle. And then the orange line is the break-even price for the ranchers. And you can see here, the blue line spends more time below the orange line than it does above it, which means most of the time for the last 12 or 13 years, actually most of the time for like the last 15 years, cattle ranchers have been operating at a loss. The cattle industry is where money goes to die, all right? And so because of that, in particular, at the beginning of this decade, look at how the prices started to go vertical in 2020. But you'll notice the cattle prices stayed below the break-even price. So all this while, the cattle herd has been getting smaller and smaller. Ranchers have not been investing in their herds because there's no money in it. Now we're at the point back in Eagle Mountain, Utah, back here, where last week Tyson announced that they're closing another beef packing plant. And Tyson said the reason for that is overcapacity. The herd is now shrunken so much that there's too much capacity. And the reason the herd shrunk is because they shrunk the capacity. Now we're into a feedback loop in the beef industry where it's now consolidating because of the consolidation. And so Tyson shuts down a beef packing plant. That's going to make things worse for the ranchers. And then President Trump comes in and says, we're going to import 300,000 tons of foreign beef. That's going to make things even worse for the ranchers, even worse for the meat packers. If they really want to fix this problem, the antitrust people need to get involved with what's going on in the meatpacking industry. It is a monopoly that is killing farmers, destroying a way of life that has existed in this country for hundreds of years. A pretty decent way of life, by the way. It's hard work, but it's better than sitting behind a desk all day. And it's dying. The American beef industry is dying. So President Trump, here we are a few weeks ahead of the midterms. And one of the reasons President Trump is getting killed, look at this chart. This is the price of ground beef in the United States going back to 1986. Look at what the price of ground beef has done as cattle ranchers have been going out of business. All of this profit has gone to the meat packers, guys, who are killing the ranchers. All right, so the antitrust people need to get involved here. They need to break up the meat packers. We need to reduce the regulations that are required in order to comply so we can actually get new capacity built, because the ranchers are not going to invest in their herd if they have nowhere to send them, nowhere to sell them to. This is not a problem that's going to be fixed with a wave of the policy magic wand. This is going to take decades to fix this problem, and we haven't even started heading down that path. All right, I also want to talk about what's going on in oil here. Oil, $86.64 a barrel this morning, moving higher over the last couple of weeks. The latest move with the war in Iran, which is now more of just a blockade or a stalemate. Trump risks China blowback with plan to choke Iran's economy. When Treasury Secretary Scott Bessent vowed to ramp up pressure on Iran by targeting its economic partners, he echoed former President George Bush's warning to U.S. allies after the September 11th attack. You're either with us or against us, Bessent said. Beijing is the main buyer of Iranian oil, and the Trump administration has so far shown little appetite for challenging its economic links with Iran, particularly when President Xi Jinping is visiting the U.S. next month, and the world's two largest economies are navigating a tenuous trade truce. Iran has already been subjected to decades of tough sanctions, and the U.S. is enforcing a naval blockade of its ports after months of airstrikes failed to force Tehran to sign a deal to end the war, reopening the Strait of Hormuz and give up its nuclear material. It's unclear what meaningful economic actions Washington has left other than targeting China or playing a ramped-up sanctions whack-a-mole against smaller entities doing business with Iran and other countries. Meanwhile, the damage to economies around the world is mounting as the war drags on. The U.S. doesn't have the bandwidth to enforce an airtight sanctions regime on a country like Iran, which has expertise in circumventing sanctions, said Ali Baez, a deputy program director with International Crisis Group. The president doesn't have the patience that's required for such a policy to bear results, which will be measured in months, not weeks. Trump on Wednesday warned that any country that's allowed financial institutions, businesses, airports, or government entities to provide any type of lifeline to Iran will itself face, all caps, tremendous economic consequences. The president highlighted oil smuggling, swap lines, cash transfers, exchange houses, ship registries, front companies. It all needs to stop, all caps, now. That oil focus puts a bullseye on Beijing, which buys 90% of Iranian petroleum exports. Washington has already sanctioned some of China's independent refineries, known as teapots, since the start of war in February, but has stopped short of targeting major Chinese banks that finance the trade. Is the White House willing to prioritize this new economic warfare campaign above its China relationship? And if it chooses to, there are serious ramifications, said Chris Kennedy, an economic statecraft analyst at Bloomberg Economics. Kennedy said the new threats are also an admission that the U.S. is running out of options. Look, I would submit that the U.S. ran out of options as soon as it became abundantly clear that there was not going to be an uprising in Iran, which happened like within the first few weeks of the war. It became a choice of blow up Karg or don't blow up Karg. And so far, we've chosen this stalemate that we're currently in. Now, if they're really serious about what this is secondary sanctions, not only are we sanctioning Iran, but we're going to sanction anybody who works with Iran. China is the one who works with Iran. So are we going to sanction large Chinese banks? Well, then get ready for the trade war to come back if you're going to do that. And it's unclear if President Taco is willing to do that or not. But I can tell you, the fact that the U.S. is running out of options, you get this in Western media. You get this over and over again. Western media hates President Trump, let's be honest. Some of it justified, some of it they're just a little bit too cravenly liberal. But there is this popular, like, U.S. is out of options. We can't possibly contain Iran. All right. That also doesn't match the reality because, yes, this war is not going well for the United States and the Iranians are inflicting pain on pretty much everybody. But everybody's making it seem like the Iranians are doing just fine and they're whistling Dixie. They're not. Take this post from tankertrackers.com. The reason why we are not seeing many loadings anymore at Karg Island is because Iran's crude oil production has, in recent months, dropped to a level just slightly north of its domestic refining and consumption. This means that they are under very little logistical pressure to export this time. And they're showing that there's tankers queued up at Karg Island, but none of them are loading because there's nothing to load. Iran has shut in their oil wells. That's what this post is saying. If Iran has shut in their oil wells, they're not producing oil. If they're not producing oil, they're not making money. And yes, we have had sanctions on Iran for decades, and they have been somewhat successful, but they have not succeeded in achieving the goal of collapsing the Iranian regime and getting them to stop their nuclear program and funding of terrorist proxies all over the world. This is new, though. Shutting down the oil production, no loadings at Karg. This is new. This is the blockade working. Now, it has not collapsed the government, and we don't know how long it would take to collapse the government, if at all. Let's be honest, the Iranians have a much higher pain tolerance and threshold than the United States has. They're willing to tolerate more casualties. They're willing to tolerate more losses of infrastructure, more just general misery than the average American is. They've lived this way for decades. Does that mean Iran is winning this war? Not necessarily. Iran has become increasingly verbally belligerent in the last few weeks, threatening to go on the offensive if the U.S. doesn't lift the blockade. Maybe that's because the blockade is hurting them, and you don't hear that. All you hear is President Trump has limited options and risks blowback. This war sucks for everybody. All right, that's the takeaway here. Now, that other geopolitical CF that actually went really well, and I think the fact that Venezuela went so well is why we went into Iran so quickly. Tankers stack up as Venezuela sells oil faster than its ports can handle. There was a lot of debate about whether Venezuelan oil production would be able to rapidly increase. Well, that debate has been settled. They could rapidly increase their oil production. The problem is they can't get it out now. Venezuela's dilapidated oil port terminals are imposing a de facto export cap on the country's resurgent crude production, with tankers having to wait up to 30 days to load because of aging infrastructure, power outages, and quality issues, according to shipping data, sources, and documents. The delays are putting roadblocks on a U.S. plan to quickly boost Venezuela's oil exports following a flagship pact with global trading houses. The fight for infrastructure looks likely to intensify as many partners of state agency firm PDVSA get ready to market their share of output independently under new contract terms. In recent months, PDVSA and its partners have been unable to surpass 1.25 million barrels per day of exports, even amid rising crude output, stock drainage, and high global demand, vessel monitoring data has showed. So Venezuela has increased their oil production. As a matter of fact, they increased it so much that their docks can't handle what they've increased. So, yeah, I guess we solved that problem, and now we're on to the next one, is they can't export it. So, well, one thing at a time. And more news on Venezuela. Venezuela's UK-held gold to be released to U.S. control and foreign audits. All right, there's some good and there's some bad here if you're Venezuela. Caracas, Venezuela's sovereign gold reserves held by the Bank of England are set to be released and placed under U.S. Treasury Department management, following recent U.S.-backed talks between the acting Delcy Rodriguez government and representatives of the defunct opposition majority parliament elected in 2015. The two sides agreed to work together to secure the unfreezing of 31 tons of gold worth about $4.3 billion at current prices to support post-earthquake recovery efforts. Ramon Lopez, a member of the opposition delegation, disclosed that the resources would be deposited in a U.S. Treasury bank account and be subjected to external audits. The gold will be released with appropriate planning and control mechanisms, he said in an interview. The gold will be deposited in a U.S. Treasury account and audited by international firms. Lopez added that the resources will be used on housing and healthcare projects, as well as support for families who lost their homes in the June 24th double earthquake. The expenses will be permanently audited. I don't know what a permanent audit is. The former deputy did not specify whether the gold would be transferred to the U.S. or exchanged. It's probably just going to be exchanged. There's no reason to move it. The Rodriguez administration has not commented on the foreign custodianship of the country's reserves. All right, so years ago, after Maduro's government basically exiled the now defunct party that won the election in 2015, Maduro pretty much overturned the election results. After that happened, the UK froze Venezuela's gold. They said, Maduro, you're a dictator. You're not adhering to the elections, so you can't have your gold back. And they have held it ever since for more than 10 years. Now, ever since Maduro was seized by the U.S. and taken away for trial, now you've got Maduro's former VP, who admittedly has a gun to her head, but she is playing nice in the sandbox with the U.S. Now you've got this exiled government from 2015 that's like, hey, we want to be in control. We won the election years ago. President Trump is like, hey, you know what? We want the oil more than we want you guys back in control. So we're going to leave Delcy where she's at, and we'll work towards elections, and you guys could settle this at the polling location. All right, so now the question is the gold. Venezuela had this big earthquake, a humanitarian disaster. There's plenty they could do with the money. Well, if they release the gold, they're giving it essentially to Maduro's people, which defeats the whole purpose of seizing it in the first place. So they had this 3-4-way negotiation between the exiled government, Maduro's people, the UK, who froze the gold, and the United States, who is now going to act as custodian for the gold and release it to the Venezuelan government with the approval of the exiled people in order to help the country recover from the earthquake. All right, so the good. The money is going to be flowing, all right? At least some relief possibly for the people of Venezuela. The bad, let's be honest, Venezuela economically has become, and militarily for that matter, has become a vassal state of the U.S., all right? The Venezuelan government literally has a gun to their head. It's our gun. Our guys are controlling the gun, which I guess is better than Maduro. But until elections are held and the Venezuelan government starts standing on his own, they're basically a puppet regime. And yeah, that's just not good long term. So a step in the right direction with much work left to be done. All right, last one of the day. Germany revoked suspicious carbon credits bought by ExxonMobil. Oh, I just love this story. A carbon credit project funded by ExxonMobil was among dozens found by German authorities to be suspicious, in other words, fake, to have overstated their environmental impact or to be fake. Authorities withdrew carbon credits generated by 30 China-based projects that claim to reduce pollution caused by fossil fuel extraction. The projects included one purchased by the Texas-headquartered oil major, according to the German Environmental Agency report dated mid-January, which Bloomberg News obtained via Freedom of Information request. The German government has not previously shared the names of the companies involved in the scandal over the upstream emissions reduction certificates, carbon credits, which first erupted in 2024. The 30 withdrawn projects claim to save a total of 2.1 million tons of carbon dioxide, roughly equivalent to the exhaust emitted by 500,000 cars in a year. Energy companies that purchased the voided credits to offset their own emissions have been ordered to compensate for the shortfall. Guys, carbon credits are fake. They don't do anything for the environment. It's just a way rich people embezzle money from poor people. It drives up energy prices, which, much like the more expensive food, disproportionately hurts the poor and benefits the wealthy while accomplishing nothing to save the environment. We've been talking about this one for years. And while we're on the subject of carbon credits, once again, I would refer you to the International Consortium of Investigative Journalists and the Offshore Leaks database, courtesy of the Paradise Papers. What you're looking at on screen right now, every one of these dots, is a shell company that was run by the executives of CoreWeave back when they ran a company called NatSource. The NatSource Carbon Acquisition Corporation, NatSource BioCF Investment, NatSource Carbon Acquisition Corporation 2, 28, 23, 5, 13. The numbers go up to the 60s. When the CoreWeave executives, including their current CEO, Michael Entrader, and one of their board of directors, Jack Cogan, who was the CEO of NatSource, they all worked together at NatSource along with one of the other co-founders. Why did they run a network of somewhere between 20 and 60 shell companies in the Cayman Islands for trading carbon credits? There's a lot of reasons to do this, and most of them are illegal, right? Money launderers do this kind of shit all the time. Tax evaders do this kind of shit all the time. Maybe there's a legal reason, a perfectly legitimate, ethical reason to set up a network of 60 shell companies in the Cayman Islands for trading fraudulent carbon credits. And maybe this is all just a misunderstanding, and one day we'll all look back on this and laugh. But nobody will ask this question. I raised this issue in a video 3 freaking years ago about CoreWeave's executives, besides the crypto mining that they did, besides the circular financing, besides the pump and dump company called Cicerex that the CoreWeave guys used to run. Not one member of the financial press has ever asked Michael Entrader in their puff piece interviews what's with the shell companies in the Cayman Islands. Nobody will ask about it. Matter of fact, that everybody said, don't listen to me when I keep pointing it out. Remember, every financial news outlet under the sun said, don't take your investment advice from Twitter randos over my CoreWeave videos. Not one of them asked about 20 to 60 shell companies in the Cayman Islands for trading carbon credits and why they were doing that. You'd think before a company could reach a $40-50 billion valuation, go public, you'd think these kind of questions would get asked first, but not in the age of AI. Nope, not when there's circular financing to be done. Anyways, it's just one of those things. Hey guys, I want to say thank you very much for having your coffee with the Melonheads this morning. Don't forget that like button, subscribe button, hype button, all that algorithmic goodness. Sure appreciate all that. Thank you also to my magnanimous Melonheads on YouTube, Patreon, and Buy Me a Coffee for supporting the channel. Hey, today is our weekly get-together for a Q&A on Zoom that we do for our Patreon members. Links down below should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.